It's 2:37 a.m. in Tokyo. Traders are half asleep. Charts are flat. And then one tweet drops. 12 words. 60 seconds later, the dollar spikes, gold collapses, and $300 billion in value shifts across global markets. No central bank speech. No policy change. Just a tweet. Welcome to the era where 280 characters can move the entire foreign exchange market. This is how a single tweet moves billions. Because in today's world, financial markets don't wait for official statements, they react to perception. And perception now spreads at the speed of a notification. It started years ago, quietly. A few hedge funds began feeding social media data into their trading algorithms, scanning millions of posts for tone, urgency, and credibility. The models learned that one tweet from the right account could predict the next 15 minutes of market behavior better than any economic report. Then, in 2018, the world saw it happen live. A single tweet from then President Donald Trump about tariffs on China sent USD/CNH exploding upward. Billions were wiped from Asian equity markets overnight. Every major bank's trading desk froze. And from that moment, the game changed forever. Social sentiment became a tradable asset. Because when you have a 24-hour global market worth $7.5 trillion a day, even a rumor can become reality if enough people believe it fast enough. The algorithms know this. They scan not just what's said, but who says it. A tweet from Elon Musk, Christine Lagarde, or Jerome Powell isn't just a headline, it's a volatility bomb. These models analyze everything: punctuation, sentiment, timing, even emoji used to predict how traders will respond. Here's the scary part. It's not just about what's true anymore. It's about what's believed first. In Forex, that distinction is worth billions. Because when money moves before confirmation, whoever's first wins, and everyone else pays for it. Let's break down how it actually works. When a tweet hits, automated systems immediately capture the text. Natural language models assess tone. Is it hawkish, dovish, optimistic, fearful? If it mentions a currency, interest rate, or geopolitical event, the system cross-references live order books and historical correlations. Then, within milliseconds, it executes trades. Long, short, hedge, reverse, all in under the time it takes you to blink. That's why Forex volatility now spikes not only after data releases, but after tweets, leaks, and viral posts. In fact, some AI trading models now weigh social sentiment as heavily as CPI or GDP data in their algorithms. Take September 2022. A single tweet claiming Japan's Ministry of Finance had intervened to support the yen triggered a flash rally in US dollar to Japanese yen, even before confirmation. Traders piled in, momentum funds followed, and billions changed hands in under 10 minutes. Only later did the official statement confirm it. By then, the move was already over. Markets no longer trade on facts, they trade on information velocity. And that velocity is now governed by one thing: social media. There's an entire industry built around this now. Tweet trading AI. Firms like Dataminer and Bloomberg Signal stream real-time sentiment feeds directly into trading algorithms. Hedge funds pay millions a year for millisecond access to verified tweet data. They don't care about the opinions, they care about the first-mover advantage. Because if you're first to interpret a market-moving tweet, you're first to profit from it. But there's a darker side. Fake news. Deepfakes. AI-generated tweets that mimic real policymakers. In May 2023, a fabricated tweet showing a fake explosion near the Pentagon briefly wiped $500 billion from U.S. markets before being exposed. It was AI-generated, and yet trading bots reacted instantly, selling off risk assets before human traders even saw the image. It revealed a terrifying truth. Markets now trust code more than confirmation. Forex, being the most liquid market in the world, reacts first. And because everything is interconnected, equity futures, bond yields, commodities. A single digital whisper can trigger a cascade across every asset class. Central banks have noticed. The ECB, the Fed, even the Bank of Japan now monitor social sentiment dashboards in real time. They know one viral headline can undo months of policy work. Some even time official statements to counter trending narratives online. That's how far this has gone. We've reached a point where influence, not policy, is the new monetary tool. When Elon Musk tweets about Bitcoin, The dollar reacts. When the White House posts about tariffs, the yuan moves. When a Fed official hints at data dependence, algorithms translate that to probability of a rate hike, and Forex pairs move before the speech even finishes. It's not about markets being irrational. It's about them being wired for speed. In an environment where every millisecond counts, trading systems must act first and verify later. And that's the paradox. The faster we build technology to interpret the world, the less time we have to understand it. Every trader is now competing not just with other humans, but with machines reading human emotion. The battlefield isn't a chart, it's the attention span of the internet. So how do you trade in a world where one tweet can change everything? You adapt. You stop trying to predict events and start understanding how the market reacts to them. You study reaction time, sentiment flow, and liquidity zones triggered by algorithmic orders. You build systems that respond to context, not just price. Because the truth is, you can't stop information velocity. You can only learn to ride it. The best traders now view social data as the new macro indicator. Not because tweets are always right, but because they're always first. And when perception moves before policy, the winners are those who can decode the signal inside the noise. This is the new frontier of trading, where influence meets execution, and the markets move not on reality, but on the speed of belief. If you found this insight powerful, hit that like button, share it with your network, and subscribe for more deep dive investigations into how technology, psychology, and money collide in the modern market. Because the next big move might not come from a headline, but from a tweet.